How's it going, everybody? Jake coming at you from ORS StratGeeks. We're going to be talking about some risk smoothing, some target smoothing, what to do on a FOMC day, or if Powell's talking, or even the day before a holiday. We're also going to be doing some backtest comparison, some totaling of all of our templates put together. So this should be a pretty cool video. Let's get started. So the first thing I want to talk about is what I've suspected and what many of us have suspected for quite some time, and that's the big market players, big banks, institutions, hedge funds. If they adjust their strategies, well, we all know that they do adjust their strategies the morning before the FOMC or release at 2 p.m. Eastern Standard Time. Whenever I speak, I'm always speaking in Eastern Standard Time, just for reference. So ChatGPT had some cool things to say about that. And also I asked it, do they adjust strategies the day before a holiday? So let's see. I asked ChatGPT, do big trading firms adjust their strategies the morning before an FOMC event or Powell speaking? Yes, major trading firms often adjust their strategies the morning before an FOMC event or speech by the Federal Reserve Chair, such as Jerome Powell. Here's how and why they might adjust their strategies. So feel free to pause the video right here and read all this stuff. We'll just say that they do. So pause the video here. I'm not going to go over all this stuff and read it to you. You're big boys and girls and you know how to read. So just pause the video there. Pause the video right there. You got adjustments. Okay, and then I asked it, do bankers and institutional trading firms change the way they trade the day before a bank holiday in the USA? Yes, bankers and blah, 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 blah. Please pause the video here and read all that if you like. And I'll scroll down a little bit. And you can get the rest of it right there. So we got all sorts of stuff. Strategic adjustments, market dynamics and volatility, client communication. Lots of stuff. Lots of stuff that they're adjusting. So let's go through some pretty cool stuff here that we got on our back tests for the main master template, the HMA template, the one that we use almost every day. And then we'll go over what we're going to do on an FOMC day, or if it's Powell talking, whatever it might be. The 2 p.m. ones are the ones I'm talking about. Every once in a while we have one of those super rare FOMCs, maybe a few times a year, where Powell decides to open his mouth at around 10 o'clock Eastern Standard Time, something like that. And trade those at your own risk. Sometimes they could be good, sometimes they could be bad. We always risk a certain amount of money per trade every single day. I always start with a standard of $200 per trade, and that's based off the equity allowance, drawdown allowance of an Apex 50K account. Scale up or scale down, however you want, but my standard is going to be $200 risk per trade, about, for the main master template, and for the London session template, which we're going to go over at the end. The risk per trade on the FOMC only template, that's going to be $100 per trade, and you'll understand why that's the case. Come on, don't lose my voice now. All right. So we can just kind of scroll this wherever, it doesn't really matter. So let's see here. Let's go over. Make sure this all fits in the screen here. We're going to go over the HMA master template for the 3-minute chart. So let's right click, go to strategies, uncheck the enabled box, click apply, go to template, load, HMA master template, and this was finished on the 26th. And we'll click load. I do have backtest checked. And we have this exclusion file, CSV date filter. We have this checked. So let me show you guys what that means, especially for people who don't have the software yet if you're watching this video. So we're telling ORS Fusion to go look at this file and specifically exclude certain dates. And we can just check that out. We can go here. So the file that we're excluding is the no FOMC or days before holidays. Every one of these days, if it's PAL talking or there was any kind of FOMC event, be it a 10 o'clock one or a 2 o'clock one, or a day before the holiday, a bank holiday, we're gonna exclude those days. And this is what the file looks like. It's just a series of FOMC dates that you have here, and it's up to you to add new dates as they come along to this file. So there's where the file is. So now we'll come back up and we will enable the HMA master template. This is the template that we're going to use pretty much every day. And this template again is excluding FOMC and days before holidays. It's going to calculate. Now we can come in and we'll right click, go to Strategy Performance, ORS Fusion 1.7, Real-Time and Historical, and we'll see our backtest results. Now even without the target risk smoothing, we have a pretty darn good results with this template. Almost 63% win rate. It is a 1-to-1 risk reward. We're going for 200% of a deviation target and 201%, and we're risking 200%. So slightly positive, pretty much a 1-to-1. But really what I want to look at here is, you can risk the same amount of contracts. Let me see how many contracts do we have on this. I'll back up for a second. Let's go to strategies and I'll see how many contracts we have loaded on the strategy right now. Position size is 3. 3 contracts for this 90 calendar day sample size. Right click, strategy performance, real time and historical. So for 3 micros, untouched every single day. And this backtest is extremely accurate. There might be one day out of the 90 that I've ever noticed that is not perfect, but you'll have that. So it's about 98% accurate backtest because of our limit orders. We use limit orders to get in, wait for the price to pull back to our limit order, and we get out with limit orders. There's no market orders. Any strategy with market orders, you might as well just throw their backtest out. It's completely worthless. We don't use break-evens. We don't use auto trails in our backtest because those you might as well, if you're using those, might as well throw your backtest out as well. So we have the main thing that I want to look at though is our risk smoothing. So let's back up again. If you did want to not touch anything and not do our risk smoothing, or target smoothing, whatever you want to call it, then, with 3 micros, your profit would be $16,573 with a max drawdown of not even $1,500. So that's where I like to keep our drawdown. I like to keep the drawdown when we're running these templates and designing this stuff to about half of what an Apex 50K account allows. Apex 50K account allows a $2,500 drawdown before they close that account and you have to reset or whatever. So $1,500, that's not quite 50%, but it's close enough. We can see our average winning trade here though is $190. Average loser about $195. So that's right in the ballpark of somewhere between $175 and $225 for what we want. We want that $200 average. So this is what one of the things I've been learning across the various templates that I've been working with over the last few days is how to smooth the templates from one to the other to be about $200 per trade. And that's simply look at the average winning and the average losing, keep increasing or decreasing the contracts on the template until I get around $200, and then we can figure out our commissions that way. So untouched, no target smoothing, $16,500 in 90 days, max drawdown about $1,500. Average trades 5.81 per day. So this is a pretty good profit factor, but it's not going to be our actual profit factor because we're doing the risk smoothing. It'll be close. So you can see our calendar day period here. So total number of trades 353, 62.89% win rate for our main master template. So let's do the risk smoothing or the risk smoothing back test here in real time in this video for you guys. So let's see, the total number of winning trades, 222. So we're just going to come to our sheet here. We're going to put 222 in times $201 is, so we're using the, let's back up again. This is kind of complicated, but I want to make sure we're all getting this. Where I'm getting this 201 is from our exit setting risk reward model here, which is 200% of a deviation, 2 deviations basically, and our profit target is 201%, so basically 2 deviations as well. Let's get back to our performance. So we got 222 wins at $201. We have 131 losses at $200. This is all estimated, of course. Let's get our calculator out. 222 times 201 equals 44,622. And our losses, 131 times 200 equals 26,200. So our total gross profits would be the 26 minus the 46, 26,200 minus 4462. I know this is going to be a negative number, but it doesn't matter. We get the point, 18,422 on the positive. And just as I'm gonna do it like this for the next 3, but I'm just gonna explain why. It's just to save me a step. So you could do the other way, obviously. 4,622 minus 26,200. You get the same thing. It's just a positive number. Duh. Okay. Now our estimated commissions. What's up with that? How do we? Well, can't we just look over here? Say commissions to $1,300 or whatever. I mean, it'll be close to that. But let's also do it this way, because we can just do it by the trades. I mean, I guess it's going to be close now, but we'll do it this way too. So 353 trades. I think it actually is going to be close now that I've figured out. I'm kind of learning stuff here in real time on this video. Now that I've got this close, the commissions are actually pretty spot on. I've got this close to 200. Yeah, that's pretty cool, actually. I could stop and redo the video, but whatever, close enough. Good enough here. Let's move this a little bit smaller so we can see everything. Click here for alt. I don't want to do that. Get that out of there. 353 trades multiplied by an average of 4 contracts per trade. Well, let's see. Didn't I just say we had 3 contracts in there? Maybe we don't need 4. I might be making myself some extra work here. Yeah, 3. I would just say in 4 because that seems like what the average is, but it's probably actually closer to 3. So 3 contracts. 3 contracts per trade times about $1.25. I actually think it's less than that. It might be $1.12. Depends on your license and if you're trading Apex or if you're got the lifetime broker's license and you're trading live account, but whatever. So $3.75 per trade, and we got what, 353 trades. 353 trades times 375, so times 353 trades equals, yeah, I don't think I even need to do it anymore. That's pretty cool. 1,323, and what did it say over here? Yeah, that's pretty cool, man. Now that I got the risk smoothing figured out from template to template to template, and just basically increasing the contracts until that average trade gets to be around $200. I don't even need to do this part of the math anymore. It's 1323, and this is going to be like 1300, right? So close enough. I mean, it's all an estimate anyway. Yeah, 1300. Sweet. Okay. Well, that makes it even easier. So total estimated commissions, we're just going to use this. Whatever. For this first one, we'll use this. Same thing. 1,323. So what do we do with that number? Well, we simply get the calculator, And we'll do the total gross profits, 18,422, 18,422 minus the commissions, 1323 equals 17,099. 17,099. So we get pretty close to what we would have used if we used 3 contracts. So that's pretty cool. Now we got our max consecutive losers down here. This is the other most important part. Max consecutive winners, great. 8 in a row. Okay, that's good. That's cool to know that that happens. At least has happened once in the last 90 days. The consecutive losers, yeah, it has happened at least once in the last 90 days. So if you see that happen, oh well, because it was not a great day. It's probably not going to happen often, because we can see our max drawdown here is 1445. Now, this max drawdown, that's not going to be really accurate if we're using the $200 per trade risk model, because look at here. We're never going to get a largest winning trade of $389 if we're trying to go for about $200 per trade on every single day. Same with the largest loser. We're not going to ever get a $431 loser. The largest loser we're going to get is probably $200, $225, whatever, somewhere in there. So we can take our max losers in a row, 5 times about 200 equals a $1,000 drawdown. But even if it's 50% more than that at 1,500, it's still right around half of that Apex available drawdown of $2,500. So we're going to just put 1,000 in here right now. And there we have it. So our main master template, HMA, 3-minute on the MNQ, 90 calendar days. We have total net profit untouched, excluding all the FOMC, all the PAL speaking, and every single day before a holiday, and also all holidays. We're not trading the holidays as well. 17,099. Let's see. Let's just for fun. 17,099 divided by 3 months is $5,700 per month. $5,700 per month. Freaking cool, man. All right. So let's get so that's that template. Now let's talk about the FOMC PAL days before the holidays template here. We're going to right click, strategies, deselect enable, apply, template, load, FOMC and day before holidays only. So what this template is going to do is it's going to exclude every single day except for FOMC days for PAL talking and any day before a holiday. We're still not going to trade the holidays. Although with this template, I mean, you probably could, but the position size we can see increased to 8. So let's see why that is. We can see down here, we are excluding this set of dates. And let's go ahead and show you what that set of dates looks like. Where is it pulling from? Documents. Only FOMC days and before holidays. Look at all these days that it's excluding. So excluding almost every day. I mean, lots of days to exclude. Etc., etc., etc. Okay? So that's where it's pulling from. Now we'll come up. We'll enable with backtest checked and click OK. Let it calculate for a bit. And we'll right click. I just wanted to show you one more thing here actually in the strategy. This is actually important. Let's deselect and just back up for a second. So for the only trading the FOMC mornings, we're not going to trade the FOMC actual events. Oh, heck no. We can see there are some very stark differences between this template and our main master template. Well, why? Well, how dare us adjust our strategy based on FOMC mornings, or or if it's the day before a holiday? That's stupid. Why would you ever want to do that? Because that's what the freaking banks do. Let me just pull up again what ChatGPT had to say about it. What'd you say, ChatGPT? Do bankers and institutional trading firms change the way they trade before a bank holiday in the USA? Oh, yes, they do. Wait, well, what about Do big trading firms adjust their strategies the morning before an FOMC event or PAL speaking? I could say in the afternoon or whatever. I think it understands what I'm trying to ask it. Yes, yes, they do. So why wouldn't we adjust our trading strategy as well? So what we have here, instead of a 15-minute opening range, we have a 30-minute opening range from 9:30 to 10. That allows the price action to expand, give us a higher high and a lower low in that time period, so we can have a bigger opening range to place our deviation levels. Our divider here is not 4 like it is on the other templates, it's 6. We also have a maximum range of 400. Anything over 400, that's not a typical FOMC day. That's a big, crazy, weird day, so we're not going to trade it. But most FOMC days or days before the holidays seem to lay right around in here. We also, instead of using an HMA of a 16, we're using an EMA of a 7 because a lot of range happens. We want to be able to catch those flips faster. And if we scroll down, we can see the time. We start trading at 10:30 a.m. Eastern Standard Time, and we stop trading at 1:55 before that 2 p.m. craziness ensues. If we're still in a trade after 1:55, we're going to close that trade no matter what, automatically at 1:59 before those crazy candles start to happen. And the other most important, very different thing with our risk-reward settings on the FOMC PAL no days before holiday template is our target. This is going to make a big difference in what I'm about to show you with our risk target smoothing backtest versus what we actually see on the NinjaTrader strategy analysis. So our target is 200% of a deviation, and our stop loss is only 50%. So we have a positive risk-reward of 1 to 4. So let's go ahead and scroll back up. Click Enable. OK. Let's get our sheet back up here. Take a sip of my beverage. All right. So let's get back to our sheet. Right click. Strategy Performance. Real-time historical. 90 calendar days. So what I'm doing here for this one is, why not risk $100? I mean, you could even risk more than that, but I'm looking at our max consecutive losers right here of 5. Geez, we could risk more than that. We could do 200. We could do 200 risk. And then you'd be trying to go for, so let's keep it on the conservative side though. So we could increase our contracts. I'll show you what it looks like here. We're just kind of hanging out in this video. It's just going to be, it'll probably end up being about an hour. So let's go to strategies and let's see if we can bump that. This would be kind of cool for you guys to see. Let's bump that average loser up to 14 contracts, and let's see if that average loser now gets to be at 200. It might need to be, we'll see. Right click, strategy here, historical. 189, that's close. So now our average winner is 6, so 2, 4, 6, 8. So it's really what this particular template, since it's a 4 to 1, is we want to make sure we're not risking more than 200. So yeah, maybe we'll just go big. So we'll risk 200. So we're risking 200 to make $2, $4, $6, $800 per trade. That almost seems like too much. Let's stick with 100. Let's stick with 100. I mean, we don't need to be greedy. You could though. You could risk that 200. So 200 times 5. Yeah, see, that's going to be too much of a drawdown. So 5 max losers, 189 or whatever. 200 times 5. It's still only $1,000 drawdown though. Yeah, we should. Yeah, let's keep it at that. Let's do some math with 189. Let's bump it up one more contract to see if we can get it closer to that 200. Uncheck. Apply. 15. Let's try. We're seeing if we can get the average loser up to 200. Right click, Strategy performance. I have done this so many times. So there we go. 202. Average winner is 649. And your max losers in a row is still only 5. So even if it was 200, even if it was 240 times 5, still 1200. So that's pretty cool. So we got 52 trades total. Oh no, our win percentage is only 44.23%. I don't care. It's a 4-to-1 reward versus risk. That's beautiful. That's a beautiful thing. And yeah, we're not going to have as many trades because we're not using this template as often. We're only using it on FOMC or Pal Talking or the day before a holiday. But we're darn going to adjust our strategy because the big boys and girls are. Why shouldn't we? I want to, like, these to me, these levels, these range levels, these deviations, these are bank levels, man, as far as I'm concerned. And I want to be using the levels when the banks are using the levels. However they're doing it, that's how I want to get closer to doing it. I mean, look at this wick right here, how it comes right down to the previous day's opening range. That's crazy. Look at that. It's just little things like that I've been seeing for years with the opening range. So, untouched. This is pretty cool. Yeah, see the commissions. The commissions. Really? Oh, because there's not that many trades. Yeah. It's actually really cool. I've actually never bumped it up this high before. I'm doing this all here for the first time, which makes for a cool video. It makes for a little bit of a bumpy road in the video for a second, but yeah, this is what we're doing. So total net profit, the FOMC template, I'm just going to shorten it, call it the FOMC template, is $9,000. Commissions about $1,000. Your max drawdown, that's sick. It's only $1,000. Yeah, five losers in a row. That probably happened right at the same time. But we're never going to have the largest. Well, I guess we actually will. This would be kind of close. That's pretty cool. Yeah, there's only 52 trades, a data set, but it's just all we got. I'm not going to go back farther than 90 days because that's our control. We always do a 90-day back test. So 2 months from now, we're going to be looking back 90 days from there. 5 months from now, we're going to be looking 90 days back from there. So we've done way more than 90 days worth of back tests. It's just that we won't look back farther than that at any given point as we move forward in time. We got to have a control. I mean, I feel like a lot of people, you can do some curve thing like, oh, well, I'll just look back 30 days and my results are way better. No, or maybe tomorrow I'll look back 45 days. No, just keep it the same every single time. This is a controlled scientific experiment as far as I'm concerned. So we got, let's do the math here. So we got 23 winning trades. And we have 29 losing trades. Let's get the calculator out. A losing trade, let's do those first. 29 times 200. $5,800 worth of losses. Oops. $5,800 worth of losses. Well, wait a minute. What's our... Well, actually, here, we got to adjust this. We're risking 200. 2, 4, 6, 8 to make 800. You don't need to go this high. We're just doing this for the video. I mean, I don't know. I think I would, maybe in real time, in reality, I might only just want to risk 100 because it does only have 52 trades of sample size. So, but there's nothing to say we can't do it this way as well. So wins is 23 times, it's the 4-to-1, 800. 18,400. Oh man, that's freaking cool. 15,400. Total gross profits minus 5,800. Oh, it makes the math easier that way. 12,600. I've been using commas. I'll put a comma there. Total estimated commissions. 52 trades. I'm just going to actually back check the... I think this is going to be right though. I mean, why wouldn't it? 52 trades multiplied by... How many contracts we got on there? It's more than 8 now. 14? 16? 15. See, I care about the commissions. I've seen a lot of companies sell strategies and post results and whatever on their YouTube and their TikTok and their websites or whatever, and then you look closer at the strategy analysis, or you look for somewhere where they're going to talk about commissions, and they just don't talk about it. It's crazy, dude. You can have a whole strategy just be wiped out, completely wiped out, just by commissions alone, let alone most of them seem like they use market orders to get in and to get out. And if they're using trail stops or break evens, just throw the backtest right away. Just toss it. So our estimated commissions, 52 trades, 15 contracts. Calculator, come to me. 15 times $1.25 is $3.75. So we had 52 trades times 375. Oops. 52 times 375. Oh, jeez. Oh, man. Crazy. I'm freaking losing it. 15 times 375. $56. So it's $56 basically round trip per trade. $56.25 times $56.25. Yeah, the commissions aren't going to be right. $56.25. Yeah, 15 contracts. 15 contracts times $1.25. Oh my God. 15 contracts times $1.25 each. Oh, $18.75. Jeez, man, I'm losing it. That's what I was like. $56 round trip. $18.75. So 52 trades times $18.75 equals, sorry about that, $18.75 times 52. It's $975. Sweet. I don't even need to do this anymore because the way that I have the commission, it's commission smoothing. The commission smoothing across all templates, it actually all works now. This is freaking cool. So it says 975 total estimate. So yeah, 975. So your total net profit, 12,600 minus 975, or is about 100. Oh, geez, come on, calculator. 12,600 minus 975 equals 11,625. So, if we take that 17,099 net profit, plus, if we're going for it, going hardcore on those FOMC days, risking 200 to make 800, 2, 4, 6, 8, 4 to 1, plus 11,625, 11,625 equals total net profit after commissions, total with HMA and the only before template, $28,724. Damn, that's sick. After comms. Yeah. That's a thing of beauty. With accurate backtesting. That's freaking incredible. So let's look at the London session. What's going on with the London session? Did I already have everything filled in? I think I might have everything all filled in already. I'm not sure. Let's double check it. So let's right click, go to strategies. And London template is very experimental at this juncture. It does have a pretty good amount of trades though. Good sample size. So let's deselect and double check all this stuff. Apply. Template. Load. And I got a lot of templates. It's over here. London 831. Yes. No dates are excluded on the London template. Not as of yet. It's trading every single available calendar day that it has in its 90-day data set. So we can see here, I think I bumped it up to 18 contracts because, you know, the London session, 3 a.m. Eastern Standard Time, and if we got a full hour opening range to try to allow some expansion so we can get bigger targets and allow larger stops as well, more room for the trade to breathe. Minimum range of 10 ticks, maximum of 400. If it's over 400 tick London session, something's crazy going on. So just have a sip of my beverage here. Nice, 35 minutes in. It's not bad. Only one little hiccup with my math. My brain started to fail me. I think we're back on track now. And we're using a 7 EMA, very similar to the FOMC template. We're not excluding anything. So it's going to start trading at 4 a.m. EST, stop trading at 7 a.m., and then these are our overnight exclusions. So we know that this is just the only window here. And let's check out our risk reward model. Is we're risking 192% to make 200%. So we can see up here that I do have that filled in already. And at the worst case scenario, if we're in a, I guess it wouldn't be worst case if we're in a win. If we're in a win at 7:30, we're shutting it down automatically. If we're in a loss at 7:30, shutting it down, cutting our losses. So whatever happens there. Let's scroll back up and enable and see how close we're getting to about $200 average per trade. So we're at 18 right now. Actually, I can't remember. It's getting close to being done with this video, though. I just want to go over this one template, and we'll add everything up. Okay, right click. You can see how small the opening range is. Oftentimes, with the London template here, looks like a break-even day. Win, loss, win, win, loss, loss. 1, 2, 3, 4, 1, 2, 3. Small loss day. Would have been $200 loss day here. But if you take a ruler, 47 tick opening range. And that's after an hour of letting it try to expand. But look where it comes. It comes right up to here and then blue. Anyway, let's minimize this back down here. Okay, so we're going to right click, strategy performance. You know, this one's not, this isn't the craziest, most amazing template for, I mean, nothing compares to our to our NASDAQ New York session, of course. So with 18, yeah, that's too big. So see how our average winning trades 487, 493. That's way too big. We don't want that. Let's reduce that to 200-ish. So we're at 18. That was 400. Let's try 8. First you have to disable. Click apply. Max position size. Let's try 8. See if that gets us close. Definitely reduces our commissions too. Calculate. And we can see average winning 216, 219. Let's go one lower. Looking for that $200 sweet spot. We're close. Deselect enable, apply. Let's try 7. Okay. Look at that chop. Right click, strategy, enable. So for me, while I'm here in Bali, if this template works as well as I think it may, this would be sweet for me because that's 4 p.m. I'm exactly the opposite of the Eastern Standard Time here. So 4 a.m. Eastern Standard Time is 4 p.m. for me. So it'd be 4 p.m. to 7:30 p.m., which would be pretty cool. But, you know, this one doesn't take it all the way to the bank. Well, it does take it all the way to the bank. I mean, I'm so spoiled. People would kill for a strategy that like actually backtests and goes live the same as the backtest that makes anything at all, let alone $6,000 or whatever. So let's do the math here. Let's see, 191. So what do we want to do? Do you want to go 191 or 189? Seems like we're going a little bit more, I don't know. It's close enough. And then, yeah, our Our commissions, yeah, I actually did the math already. 2,600. That's yeah, 2668. It's the same. I don't even need to do that math again. Cause yeah, I had it already at 7. That's what we're at, right? Starting to get tired. And we're at 7. We're at 7. Okay, so I already did all this math. So yeah, we come out with the 5,000 after commissions, and this performance here, it's cool when it all matches. I mean, it should match. It's not that hard. Yeah, 5,900. Looks like I included like a little bit more commissions. So yeah, wins 169. Yep, times 200, 38,800. And losing trades 136 times 192, 26,112. Total gross profits 7,688. 305 trades total. At 875, right? Yeah. 305 times 875, 2668.75, and we simply take the 7688 minus 2668. Pretty close. 5,900, 5,000. We'll go in the lower end here, and our max losers in a row 7, 1,400. So let's do, pretty cool. Let's do, if we actually traded all 3 templates on the MNQ 3-minute chart, HMA master template, the one we use almost every single day, the FOMC PAL day before holiday exclusion template, and the London template. So it would be 5,020 plus 28,724. 28,724 equals 33,744. Untouched. Divided by 3 months equals divided by 3 months, $11,000 a month. Was it? 11,248. 11,248 per month. And that's only with one account, one hypothetical 50K Apex account, of course. All these results are hypothetical, and disclaimer, past results not indicative of future performance, blah, 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 hypothetical, blah, blah, blah. I want to just reiterate that to everybody. But this is what the survey says right now. So imagine if you had 10 Apex accounts. That's not out of the question. A lot of people I know have 10 PA accounts. Times 10 PA accounts equals I mean, we already know what that's going to be. We can all multiply that by 10. 11,000. What was it? $112,480 per month. I know, there's people out there making it. We can do it too. Thank you, ORS. Thanks for everybody for hanging out. Hopefully, let's make that a big fat $sign. That's the bottom line. All 3 templates untouched. Boom. All right, everybody. Jake from StratGeeks talking about your ORS Fusion, signing out.